Good morning, everyone. You're most welcome to today's episode of the Market Snapshot series. My name is Norbert Kiza. Today is the 11th of September 2024, and today is also an awesome day in the markets because we have all right. Today is also an awesome day in the markets because we have the US CPI that is going to be released 3:30 p.m. So we are going to go through. We are going to go through some of the previous readings that we have gotten from inflation, and then we shall also go through some of the bank forecasts that we have also gotten for inflation for the US banks for headline inflation yearly basis. And then after that, we shall look at the DXY. And soon after the DXY, we shall then go over the rest of the charts to see how we can expect the movements today to play out. Now, before we start, we can just quickly look at how the markets are moving today. Awesome. So we can just go through the markets to see how they are moving today. So if you have a look at the markets today, we have a bit of bullishness for a number of commodities and metals. Gold has been quite resilient in the light of a relatively strong dollar. I wouldn't say the dollar has been that much of a strong asset since, of course, the NFP numbers that we got last week were disappointing, and that, of course, did not really see that much of a move. However, despite us having weak NFP numbers last week, we still were able to see some weakness in some currencies like the euro and the pound. And I believe that is due to some exhaustion by the buyers, and we saw some selling coming in there. Gold, however, historically tends to perform well ahead of rate cuts and elections due to uncertainty that is there during election time. And of course, it's not a big it's not a big surprise that we are seeing how gold is trading right now, trading at around 2,524. And of course, with the expected decline in inflation today, I suspect gold is also enjoying that upside momentum. We are also seeing the crude oil prices are trading at the lowest prices since 2021. And I think this is also a precursor towards a recession. We have also seen that the inversion for the short term and long term yields in the US has almost come to an end. And we're now seeing that all those are pointing towards a sign of a recession. We're not too certain whether recession is going to play out, but usually whenever we see lower prices, it's always a sign that demand globally has reduced, and it could point towards a time of slowdown. So you can see oil prices trading lower at $66 a barrel. On crude and Brent, we're trading at about $70 a barrel. Crossing over to the forex market, forex, we're also seeing a bit of indecision ahead of today's CPI report. So not that much of a move, and of course I suspect after the report is when we are going to see a more decisive move for the markets. There's really very limited price action right now and indecision. And New Zealand dollar, USD JPY trading lower. Of course, that is with expected rate hikes that are going to come from the Bank of Japan, and of course the rate cuts that are also expected ahead. That is from the Federal Reserve next week. So I would say by far and large, even without the CPI report, the markets are looking really net short on the dollar, and we're expecting to see some big moves to the downside for the dollar if the inflation indeed comes in lower. Looking at the indices, I would say we're looking quite bullish today. We are seeing some strong resilience for the DAX at 18. It had a barrier yesterday at about 18,175, and it seems to be moving higher, looking quite bullish there. I'll be looking towards some buys on the DAX with a stop loss set around 18,100. Ahead of today's inflation, the most important index to trade is the NASDAQ, which tends to usually perform strongly higher whenever we have lower inflation. The last time the inflation number ticked down from 3% to 2.9%, the NASDAQ launched a rally of close to 600 points within the day. So keep an eye on the NASDAQ, because that's when we can expect some movements to happen after a lower reading for the inflation number. Crypto is also looking a bit bearish at the moment. We are looking at the crypto selling a lot due to, of course, the inversion that's happening right now. And of course, we're also seeing that there isn't that much of interest right now for cryptos. The FOMO hasn't yet kicked in. And I think that all that is playing a big part with us seeing a relatively weaker crypto market. So let's cross over to the main topic of today, which is the CPI. Now, before we go to the charts, I want us to have a look at the inflation numbers. First of all, by looking at how the inflation has been doing on a headline number. We've been seeing the headline number declining quite nicely. And of course, it's in summary that you can say that the US has now had what we can call a disinflationary trend, where inflation has been steadily declining. You can see from August, September, you have been seeing it ticking lower. Right now, the reading is at 2.9%. And of course, quickly reading this, it says here that the annual inflation rate in the US likely slowed for the fifth consecutive month to 2.6% in August 2024, which would be the lowest since March 2021 from 2.9% in July. Compared to the previous month, CPI is projected to increase 0.2%, the same as in July. Gasoline prices are anticipated to decline, while rents and car insurance could show signs of slowing. Meanwhile, core inflation is seen steady at an over 3-year low of 3.2%. The monthly core inflation rate is also anticipated to remain at 0.2%. Now, looking at the headline number, the forecast for the headline number, much of the reason why the headline number is expected to come in at 2.6% has a lot to do with the decline we have been seeing in energy prices, as well as also fuel. I would really speak more on really on those two. We have seen that there's a disinflationary trend. We have been seeing oil prices declining, and of course, pump price, I believe in the US, has also declined. We're also seeing that the core reading seems to be the only one that is holding up. And of course, if core declines, I suspect we are going to see the headline ticking lower to about 2.4, possibly 2.3%. And of course, that could spell a much weaker dollar and a strong buy for gold today and a few others. Now, looking at the headline number for monthly, we're expecting it to come in line with expectations, which is 0.2%. And of course, it also will expect it not to change from the previous, which of course is 0.2%. Looking at the core inflation readings, we can also expect that we are going to see a slight tick up on the core inflation monthly from 0.2% to about 0.3%. And of course, that I don't think will allow the dollar to recover. Remember, like I said, if you're a trader right now, you need to arrange your fundamentals in an organized manner to see what are the different things affecting the fundamentals. Yes, you have the inflation coming out today. But in addition to that, you also have a Federal Reserve that is going to cut rates next week, So positioning wise, I would say that dollar is looking extremely vulnerable, and we could see it really weakening. Now, let's just have a look at the forecasts by the banks. Let's have a look at the forecast by the banks. So, of course, we have some forecasts by some of the big banks. So I just want us to have a look at them so that you can see what they're expecting. So we are going to start with Bank of America. So Bank of America at the moment, they're expecting the headline number to come in at 2.6%. They're also expecting the core CPI to come in at about that's a reading of about 3.2%, which is in line with the previous. So in other words, they're not expecting a decline on the core, but only on the headline. And like I have mentioned, guys, the main factor driving a lower headline number and forecast is that decline on the EFU, most especially the fuel prices and the pump prices in the US. Barclays is expecting a decline from 2.9% to about 2.5%. Citigroup is expecting a reading of 2.5%. Deutsche Bank is expecting 2.6%. Employer America is expecting 2.5%. Goldman Sachs is expecting 2.6%. Morgan Stanley, Nomura, Piper Sandler, TD Securities, UBS, they're all expecting 2.5%. The forecast for the underlying inflation is expected to come in at 2.6%. And of course, Wells Fargo is expecting 2.6%. And we can of course see that the medium target is a decline from the reading of 2.9% to about 2.5%. So again, guys, looking at these forecasts, we can clearly see that the consensus is that we get a decline on the headline number. And of course, I don't think that the actual number is going to fall so far from these targets. We might most likely get a difference of less, maybe 0.1%. We should have a reading of about 2.7, maybe 2.8%, close to these expectations here for the banks. Now, you can also tell that the medium target for core is expected to come in at 3.2% with a decline of a medium decline of about only 0.1% from the previous. So I think on one hand, we can clearly expect that the inflation numbers are going to come in relatively lower, in line, of course, with these expectations here. Now, to quickly look at the charts to see how the charts are looking like, we are going to first of all begin with DXY. So a quick look at the DXY, we can clearly see here that the DXY is still looking quite vulnerable. From my previous analysis from the previous weeks, I had expected the DXY to have a bit of a relief rally, which of course it did. But my expectation for that relief rally that would get something like this playing out. Wait, this is the 4 hour. So I was expecting something like this to play out for the dollar. Okay, something like this. So now we got just a bit of that rally, which was to this level here. And of course, after the dollar got to this level, we saw that actually the DXY, we saw that it actually started declining. So at the moment, there's a bit of supply for the dollar, especially at around this zone here. Now, take note, guys, I don't want you guys to forget that next week the Federal Reserve is going to meet. And when they meet, they are looking towards possibly cutting rates for the first time in 4 years. So indeed, if they do deliver that rate cut, that is going to spell a lot of downside momentum for the dollar. So it's important to understand that odds are in favor of a weak dollar, regardless of the inflation number, regardless of any other fundamentals. Institutions and retail are net short on the dollar. So that could allow us to see a bit of weakness. Now, how the markets play out again after the inflation comes out, this is what we can expect. If we get an inflation reading greater than 2.9%, which is the previous reading, we can expect there to be a bullish dollar, where the dollar could recover, and we could have something like this playing out, breaking above that supply zone and possibly maybe moving slightly higher to those highs that we got around this period of that was mid-August. However, if indeed the inflation number comes in below 2.9%, then of course we can expect there to be a bearish dollar, and we could possibly see the dollar trading lower towards these levels of support, which is somewhere around here. So again, the main topic and of course the main highlight for today is, will the DXY break this support? Okay, will it break this support? Because of course, if it does, I believe we are going to see most likely a strong gold and of course strong Euro USD and the like. But for now, it's really just a wait and see to see how does the DXY play around here. Now, maybe if I'm to just remove these lines, you can clearly see that the DXY after last week's NFP, it created some sort of a higher low around here, okay, which is of course what I also expected. We had a bit of a grab of liquidity along here. And again, guys, this support zone where the DXY has also been holding was a support level from 2023 December. So just take note of this. It's been it's been holding this zone very nicely. So we need to wait and see that if indeed we see a break of this support zone, it's very likely that the dollar is going to sell off, and the sell off could take it even lower uh, uh, to these lower levels here. Now, maybe it's also important for us to see how has the dollar done around this time of the year. Okay, the last time we had an election. So we are going to check out 2020, uh, which is somewhere around. Oh, okay. I need to change my plan. I can maybe change to the. Let me change to the 1 hour. Okay, or the daily rather. Sorry, let me change to the daily. So for the daily, if we go to 2020, this is what we had. Okay, so 2020, this is how the DXY did. Okay, so around September, uh, towards the okay. So what we can see here with 2020 is that mid-September we had a rally on the DXY, that was election year. Okay, and then the DXY topped towards the end of September, and of course at the end of September is where we saw the DXY rallying lower. Then by 2nd November, after the elections, we had a sharp sell on the dollar. Okay, so this was the previous trend we had for the DXY in 2020, which was also the election year. So we have typically what I can call a bearish DXY, okay, during election periods. So we're already seeing this trend already playing out. If you go to the current chart, you can already see how the DXY is also looking bearish, and we're going to see the similar kind of thing. We're already actually seeing it, guys. You're already seeing the bearish dollar. The dollar has been selling from these levels here back lower. So I suspect again, even today or even into October, we can expect to see a weak dollar. So just take note of that, guys. Positioning right now is in favor of a weaker dollar. Awesome. So let's cross over to the charts and see what you can expect from today's NFP, rather today's CPI, sorry. So we are going to begin with USD CHF. So for USD CHF, I had added our Fibonacci retracements last week, marking our swing lows and marking our swing highs. However, USD CHF has stayed extremely vulnerable, whereby I was expecting us to have a bit of a bullish move after last week's NFP. The NFP was actually came out weaker for the dollar. We didn't get that much of a move to the upside. And I'm expecting that today, if indeed the CPI numbers come in lower, we should potentially see a break of this demand zone for us to possibly see a sell for USD CHF to the downside. Take note, however, that it's also likely that the inflation has been priced in. Weaker inflation has been priced in, and just in case we do not break this level of demand around this demand base here, where we also have a number of liquidity grabs, I think we should be looking to buy USD CHF from here. Set your stop loss slightly below this demand zone, so that just in case we see price failing to break below here, then we could possibly see a move to the upside. So this is what I can expect for USD CHF. Stop loss around here, and you'll be looking towards a buy towards that level up there. Now for Euro USD, I have a falling wedge set up on Euro USD, and I'm also expecting a weaker inflation today. So we should see Euro USD breaking to the upside. This falling wedge pattern is also in line with the moving averages that are currently indicating that we do not yet have signs of sharp selling for the Euro USD. So we should see some buying momentum here. That's after if we get weaker inflation for us to see a move to the upside. Now, if we break our golden ratio level, which is marked around there, then I suspect the Euro USD could have some selling momentum that could possibly take it below the 200-day moving average towards this area of demand. Now, I know that the Euro USD, again, does not have that much bearish momentum, and my reason for thinking that way is because of taking note of the fundamentals on the markets right now. Fundamentals favoring a weaker dollar. So I think in that case, then, or in that regard, Euro USD most likely will not benefit from any more bearish momentum. I'm keeping an eye to see how we fare around that golden ratio, simply because just above that golden ratio is where we have the next level of demand. So if indeed we get a weak inflation reading for the dollar, Euro USD will definitely rally, and we should get into the Federal Reserve rate cuts when we are slightly at this zone up here. Now, looking at GBP/USD, I also have a similar setup for GBP/USD, which is a falling wedge. The falling wedge typically is used, it's typically drawn like this, okay? And it's normally used in reversal markets where you have the market selling. And of course, when a market is selling, you normally look for a reversal to the upside. So I'm also expecting that today for Euro USD, rather for GBP/USD. The fact that we are also trading above our 200-day moving average again adds more certainty for this move, where I'm expecting us to see slight test of our 38.2% fib level before we see a move to the upside. Take note also that we've been having price staying quite bullish for GBP/USD, where we've been seeing those liquidity grabs. I think you guys must have seen a number of them with this downtrend move. So normally when we have many liquidity grabs, it's always a sign of bullish momentum. So just keep an eye there to see how this fares. So just to complete my outlook for GBP/USD, if indeed we get weak inflation, I'm expecting us to see maybe a slight retracement back down before we see a move back to the upside to take us trading at those levels. Now, let me talk briefly about gold. So, how we've been trading gold, I think, over the past weeks is that we've been using sell limits. Sell limits are essentially where you ideally place limit orders like this. So, for instance, I will come on my chart and I put a sell limit around there. The sell limit is that when gold reaches here, it triggers it and then sells, right? So the sell limit orders have been working well for gold, whereby you can see how many times it has been selling from that zone. We've been seeing it selling from here, 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 here. Actually, these are more than 5 times we have seen gold selling from this area here to the downside. So what I can say about gold is that gold is looking extremely bullish, and looking at its structure here, it typically looks like it wants to break all-time highs. You can see how gold is looking when you change it into a line chart. We have very, very strong bullish structure here. And we're also seeing a lot of liquidity grabs for gold off certain levels. We marked this area of demand that was around 2480. Gold tested all areas of demand very nicely and bought off them. So where you see my color marked in green, that is where we have been buying gold, and of course looking at closing our trades from those areas there. Now, one of the reasons why gold is very, very bullish, for those of you that might not be aware, is because of the imminent rate cuts from the Federal Reserve, which are next week. Uh, the other thing also is that there's a lot of uncertainty, especially towards this period of US elections. Just yesterday, we had a debate between Kamala Harris and Trump. There's uncertainty so high, investors are starting to see how they can prepare ahead of the election, maybe ahead of any kind of uncertainty. It could be maybe election rigging. It could be maybe Trump refusing the if Trump loses, God forbid. Of course, I don't want to decide for him to win or lose, but just in case maybe Trump loses, right? There could be maybe some kind of scuffle or some kind of So all those are uncertainties, and gold tends to be the go-to asset during these periods. So I expect that we are going to see gold having hard time to sell. The price action is extremely bullish. We have a lot of liquidity grabs off certain levels. All these areas we've been seeing gold buying very nicely. We might see a bit of a dip on gold today after a lower inflation reading, and then soon after that, I'm expecting gold to break structure. Once we break structure here, we are going to get buyers coming in that could possibly see gold rallying up to those areas there. So keep an eye, guys, and just wait and see what happens with gold after the inflation. Now, summing it up with the NASDAQ, NASDAQ at the moment is looking very, very bullish also. I marked this death cross, which was a very, very good sell indicator that was last week, but we have tapped into our area of demand with that green box, and now buyers are in. And I suspect now we are going to see NASDAQ starting to rally. So at the moment, NASDAQ has an asymmetrical triangle. An asymmetrical triangle is typically drawn whenever you have price action looking a bit like this. Kind of indecisive, I would say. It's indecisive price action. And typically with asymmetrical triangles is the the highs become lower and the lows become higher. So it forms something like this. So that's what I've been seeing with the NASDAQ. And it looks like it wants to break somewhere soon. It's going to break somewhere. We just have to wait and see where exactly that break is going to be. So it might break down, okay, or it might break up. Now, speaking about the previous inflation we have gotten, uh, NASDAQ tends to perform uh, higher whenever we have lower inflation readings because the tech stocks are uh, I would say they are not inflation proof tech stocks. So whenever inflation increases, tech is always the one that gets better. That is why in 2020, the Nasdaq went into a bear market that was the worst ever. Nasdaq's bear market in 2020, just for you guys to take note of, it collapsed by close to 40%. And even when the Dow Jones started recovering from that bear market, Nasdaq Nasdaq took like almost a year and a half to recover. So Nasdaq doesn't do well whenever inflation is high. So if the inflation comes in lower today, Nasdaq is going to rally. Okay, Nasdaq will rally, and I'm expecting the first target for the Nasdaq is going to be this level of 19,000. Okay, where we have that liquidity grab here. So I'll be looking to buy the Nasdaq towards this area here. If we achieve this level, then I believe the next level for the Nasdaq to aim for will most likely be this area of 20,000. So there are still a lot of levels where Nasdaq could buy if indeed we get a lower inflation reading. So those are the levels that I'm expecting for the Nasdaq. So we are going to get a break very soon, and the break should be here. We're supposed to get this break, come and take out this liquidity here, have a bit of a pullback. So a break and a retest before we see a nice break to the upside, taking us up to 20,000. Yeah, so guys, I think that's it from my end. So I welcome any questions. If you have any questions right now, maybe the time for you to ask them. Send in your questions so that I can be able to go over them. Okay, Martinez Forex Academy Zambia, thank you so much for tuning in for today's episode. You're saying if the CPI comes out lower, FOMC is going to be strong since they're going to cut rate. Okay, so what I can say about the CPI, the Federal Reserve has already decided on cutting rates, regardless of the inflation they get. And inflation, okay, look at it in this way. The Federal Reserve has two mandates. The first one is maximum employment, the other one is price stability. So the main core reason for the Federal Reserve to act on cutting rates is not because of inflation. Even if the inflation ticks up higher, it's already close to the 2% target, longer term target. Remember, right now, the headline number, rather than the PCE is the one which they gauge on. PCE, the last time I checked PCE, it was about 2.6%, 2.7%. The Fed's target is 2%. So it's just short of the target by 0.7%. So that cannot stop them from cutting rates. However, the main reason why they need to cut rates is because of the labor market. The labor market in the US has been cooling a lot. And the reason why they would need to cut rates is that they wouldn't want a scenario where the labor market cools even further and then they are blamed that they delayed. So they have to act, but they are going to act on the premise of them trying to sustain the labor market from cooling even further. So the rate cut will be delivered without a doubt. However, uh, the markets are now indecisive in a sense that is the is the Fed going to cut rates simply because they are trying to save the US from a recession, or they are going to cut rates as a good thing? So if they cut by 50 basis points, then it means that there they are cutting and it's a bad thing. The rate cut is a bad thing. But if they cut by 25 basis points, it's going to be a good thing, and we shall see the markets rallying because of that rate cut. Yeah. Next question. Hey, Thomas. Thomas, you're saying, hello. My trading view doesn't accept technical tools for analysis. They seem locked, just like the 800 EMA accepted on adding it declines, but runs subscriptions. Yeah, some indicators on trading view need subscriptions. You need to pay, I think, about 50,000 shillings per, that's Uganda shillings, for you to subscribe to for trading view. So it's like the 800 EMA is locked, but you can access the 800 EMA on FX as MT5. For instance, when I come and I edit my EMA here at 800, it will add it. So right now my 800 EMA is showing. So you don't really even need to pay for it. You can still access it for free using your MT5. I hope that helps, Thomas. Right, next question. Okay, at what time are we expecting CPI? Check out USD Okay, so I think, guys, we haven't checked out USD in a while. I think the last time we talked about USD I'll just maybe I'll go to, I want to check out USD on trading view, since that's where my analysis is for it. So I guess for USD we're looking at a bearish move. Fundamentals wise, we are looking at a sell for USD. That's because the Bank of Japan has indicated that they are going to hike rates. So technically, we are looking at a relatively weak USD currency. We have also had a lot of signs for bearish momentum. I mean, if you look at USD again, you're looking at you're looking at a bearish flag here that appeared, that was just not so long ago. This, of course, is typically a sign of bearish momentum. And again, really, fundamentals are not favoring a strong dollar, which of course again means that USD has to sell. Looking at where it could possibly go to, USD has so many levels of structure to reach. We had targeted 142. It has broken 142 already. The next target for USD is going to be, we are going to come back to 137, which was just in July. But the downside for the JPY the downside for the yen pairs has just begun. It's going to get weaker and weaker. Yeah. Okay, next question, you're saying, hello, Mr. Norbert, kindly help me do an analysis on AUD in a daily time frame. Okay, so for AUD we can also look at it on trading view. I don't have it on my MT5. So on the daily, this is what we have. So for instance, if you're looking at AUD you have to look at the different levels that you have. So for instance, first thing, of course, you need to see that we're having a lot of liquidity sweeps or liquidity grabs for this pair along these levels here. Okay, so again, guys, this is typically a sign of bearish momentum. However, the other thing, of course, what I can say about AUD is that it has also some levels of demand where it could possibly buy from. For instance, like here, this is where we have the liquidity sweep on the H1, and we could see some buying coming in from there. We also have some imbalanced candles also around these areas here. So we are most likely going to see some reversals for AUD around these areas here, possibly looking for a buy up here. Now, again, guys, if you're trading anything that has the dollar, keep an eye on the DXY. If you're trading anything that has the dollar, so if your quote currency, for instance, in this case, for AUDSD, your quote currency again is the AUD. So again, there, your idea you're looking at are weaker. If the dollar comes in weaker, then of course you should be looking for a buy. But fundamentally and technically, anything where you see AUD, GPP, XAU, all those are technically buys, and you should see some buying momentum coming in there. Awesome. Next question. Which CPI values are relevant? So first you focus on the headline number, which is that's the main number that's important. Okay, the headline number, that's the most important number that you focus on. So you'll be looking at a decrease or increase on the headline. The monthly number is also important, but not as important as the headline number. Yeah, so the headline number is the one you focus on. Awesome. All right. I think maybe okay, that is NASDAQ. So for the NASDAQ, again, just to go to it, this is what we said. So NASDAQ right now has an asymmetrical triangle. An asymmetrical triangle looks a bit like this one right here, where you're having lower highs and higher lows, and then we aim for a breakout on either side. So if you get a breakout to the upside, typically that's a sign of bullish momentum, and we can possibly see the market rally to the upside. However, if you get a break to the downside, then that's a sign of bearish momentum, and ideally you'd expect to see the market selling to the downside. So I hope that helps, Francis. Yeah, so guys, I have a lot of commentary, trading commentary on X, on Twitter. Uh, in case maybe you want to follow me and get more information, you can follow me at kbarige on Twitter. So I comment a lot about trading and any other thing. So you can go there and find information there regarding the markets. Yeah. All right. So guys, I think that's it from my end. I wish you guys all happy trading. Uh, Someone's asking about crypto. Yes, you can trade. You can trade Bitcoin and all the other cryptos. For instance, like here, we think we've been doing analysis on crypto for some time. So again, you can trade it. There are so many cryptos, and also many of these cryptos have very low margin. For some cryptos like Solana, you can even buy Solana with as little as $0.05. So guys, don't miss out that opportunity. Yeah. All right. What's up? That's it from me. I wish you guys happy trading. Yeah, and maybe for my brothers and sisters from Tanzania, FX Pesa is going to be opening in Tanzania very soon. So keep an eye out for information on FX Pesa's socials to see when that will be. But it's around the corner. And I wish you guys all an awesome trading day. Someone is asking about the Dow Jones. All right. Yeah. Yeah, so for Tanzania, the man to follow is Prudence. So Prudence Maximilian is our education partner for FX Pesa in Tanzania. So he's in case you have any if you want to learn trading or you need a community, you can reach out to Prudence and see how you can connect with him. Yeah, awesome. My X handle is at Norbert Kebarige. That's on Twitter. Yeah, can maybe just go to here. So yeah, so this is my X handle, guys. So you can find me on Twitter. Let me just go there quickly. Yeah, so this is my Twitter page. I post a lot of trading info, so you can go check it out and follow me on Twitter. Awesome. All right. So I was just wanted to look at the Dow Jones quickly in a second. So the Dow Jones is also having a bit of a choppy momentum there. So you can expect either break to the downside or a break to the upside. I've drawn an asymmetrical triangle there, and I'm expecting us to have a break very soon for the Dow Jones. So either we break to the upside or break to the downside. However, compared to the NASDAQ, Dow Jones doesn't react as much during CPI. So The gentleman that asked about that, I think, is called eccentric Imasov. Eccentric Imasov. You might want to focus on trading the NASDAQ, which tends to react more to the CPI compared to the Dow Jones. Awesome. That's it from me, guys. I wish you all happy trading and thank you for tuning in today for today's snapshot.